Smart money leaves footprints on every single chart, and most traders walk right past them. They are called order blocks. Once you learn to see them, you cannot unsee them. In the next few minutes, I am going to show you exactly what an order block is, how to spot one on Bitcoin, and how to actually trade it. No fluff, no magic indicators. Let us get into it. So what is an order block? Keep it simple. An order block is the last candle in one direction right before price explodes hard in the opposite direction. That is it. When big institutions want to buy or sell millions of dollars of Bitcoin, they cannot just click market and fill it all at once. They would move the price against themselves. So they build their position quietly in a small zone, and then they push price away fast. That little zone they left behind is the order block. Why does this matter? Because institutions rarely get their whole position filled the first time. They leave unfilled orders sitting in that zone. And price has a habit of coming back to that exact area later to fill the rest. Traders call this mitigation. The chart returns to the scene of the crime. That return is your opportunity because you already know where the big money is waiting. There are two kinds you need to know. A bullish order block is the last red candle before a strong move up. That is where buyers stepped in. A bearish order block is the last green candle before a strong move down. That is where sellers took control. Bullish blocks act as support when price comes back down. Bearish blocks act as resistance when price comes back up. Now, how do you actually identify a real one? Because not every candle is an order block. You need three things. First, a clear origin candle, the last one before the move. Second, a strong impulsive move away from it. We call that displacement. If price just drifts away slowly, it is not a real order block. It has to leave with force. Third, that move should break a recent high or low. That tells you real momentum stepped in, not random noise. Origin candle, displacement, and a break of structure. All three, or you skip it. So how do you trade it? You do not chase, you wait for price to come back to the order block. When it taps that zone, you look for a reaction, a rejection, a shift in momentum. Your entry is at the edge of the block. Your stop goes just beyond the other side of it. Because if price closes clean through the block, the idea is dead and you want out cheap. Your target is the nearest pool of liquidity, usually the previous high or low where stop orders are stacked. That gives you a tight stop and a much bigger reward. That is the whole point. Let us look at Bitcoin. Picture the recent drop. Before that big sell-off, you had one last green candle where price was grinding up, looking strong. That green candle is your bearish order block. Sellers loaded up right there, then slammed price down with force, breaking the lows underneath. Days later, price bounced and crawled all the way back up to that exact zone. And what happened? It got rejected right on the order block and rolled over again. If you knew that zone was there, you were not surprised. You were ready. Here is the mistake almost everyone makes. They draw an order block on every single candle and then wonder why it does not work. An order block without displacement is just a candle. The power comes from the strong move and the break of structure that follows it. No displacement, no trade. Be picky. The best setups are obvious. If you are squinting at the chart trying to force it, it is not the one. Quick recap. An order block is the last candle before a strong move, where smart money built its position. Bullish blocks are support. Bearish blocks are resistance. You need an origin candle, displacement, and a break of structure. You wait for price to return, enter at the edge, stop beyond the block, and target the nearest liquidity. That is order blocks, start to finish. If this made order blocks finally click, subscribe, because next I am breaking down fair value gaps, which work hand in hand with these. I trade these concepts with real money on Bitcoin, and I show every trade win or lose. One last thing. This is educational only, not financial advice. Crypto is risky, so only ever risk what you can afford to lose and make your own calls. See you in the next one.